It has looked better, then it has looked worse. It's been that kind of a day, seesawed and very sharply sometimes, but has kind of come back to these levels. So the average would be around this where we are trading now, 24,150 or so for the day so far, after the spikes and the dips as well. Amit Gupta is with us, Senior Vice President and Fund Manager at ICICI Securities PMS. Amit, good to have you with us here. Thanks for your time. Just want to start with your thoughts on all these renewable plays, green energy. A lot of some discussion, not a lot of discussion, but a lot of movement in stocks. You look at this Vari, which is coming off. Suzlon is down sharply. A few other names are coming off as well. What is your sense? I don't know if you have investments in any of them. Basically the concern is around tariffs going up. Into the US and and of course with specific companies, the worry is maybe the import from China and then they sort of a value add and then export out. So that comes under some pressure, possibly if tariffs in the US etc. go up. So just wanted your thoughts.
So I think we have to take this volatility now going forward, because the tariff and all those kind of news will keep on coming out. We are not sure about this, but these stocks have also run up. That also we need to understand. And I think here only the opportunity comes when the stock declines. So before this whole segment, some of these stocks have started falling now. Some stocks had fallen before. For example, the battery makers. And I think this electric vehicle segment, if you see the EV push in India, which was hardly 1% in just 2-3 years before, now it is almost 7.5%. And the battery as a space we like, and that is part of our portfolio. I think one of the immediate kick for this segment is that the battery prices are coming down. It used to be $153 per kilowatt hour. But by this fiscal year ending, it may be close to $115 per kilowatt hour. In the coming 2 years, it can even decline below $90. So if it is happening not because there is a destocking from China, it is happening because there is a raw material decline. So we had seen the lithium prices also had declined. And along with this, there is an advancement in the technology. It favors the manufacturers. And actually, it will lead a volume expansion in the EV. I think the time may also come when without subsidy, you will have the price of EV equivalent to the ICE. In that case, once your running cost is lower, I think eventually you will see more attraction toward the EV passenger vehicles. It is more into the two-wheelers currently, but it can come into the passenger vehicles also. And that's why these battery makers, will have a benefit. Amar Raja battery is a part of our portfolio. And we have started buying now when the stock has declined from 1800 to 1300. And that's where I think the opportunity comes in. I think they are coming out with 16 gigawatt of, lithium ion battery plant going forward, which is going to be commissioned in possibly 1 or 2 years. They are going to come out with a lithium iron phosphate plant. And they have gone into, agreement with one of the Chinese battery player also, which is Gotian, which is the top 5 player in China and the top 10 player in the global markets. So the things are coming back here, and I think they have seen a little tough period actually before, so they were consolidating for a long period. Now in the Telangana, we have seen there is a government change, and that's why the things can come favorable eventually for this company. So this is what we feel should be looked at currently in this space.
Amit, hi, afternoon. Now, IT is seen as a bit of a macro trade to play this Make America Great Again. IT companies get about 70-80% of their revenues from America. The corporate tax cut will help. Plus, on the margin, the rupee depreciation aids the margins. Would you look to add to tech positions based on this narrative?
So my immediate answer is yes. I think if you look at technology, for the last 2 years, it was underperforming because it was looking for growth in US. And if you see from September onwards, there is, if you look at the spread between 10-year bond yield in US and the 2-year bond yield, this spread was continuously negative from the mid of 2022. So almost 2 years it was negative. It was indicating towards some kind of recession. And from September onwards, we have seen it has come in positive. So it looks like the recession is no more there, and they will look for more growth. And this is what actually can come good for the IT companies. Their guidance possibly can start increasing. We have seen little bit. If somebody has given 3 to 5% guidance, they are coming to 3.5 and 5.5%. So those kind of things are happening. But eventually, our sense is they can increase more. Along with this, there is a time now in technology itself to focus on those companies which are looking at ER&D as a segment, and they are looking at generative AI as a segment. So SCL Tech, for example, is part of our portfolio. We feel that this company is looking into both these segments. ER&D, we feel, can have a faster growth path going forward, because if you look at in your own cars, we had only 8% of softwares used before. Now it has increased to 26%, and we feel it can go to 57-58% also going forward. So these companies will get benefit of this. And generative AI, we have seen the companies have started working now, and that is where the growth path possibly is there. The valuations are okay, if not very cheap, but from here, relatively, I think this segment can perform.
Hi Amit, good afternoon. Good to see you in. Amit, Indian Hotels, the stock is been strong all through the trading session, and we heard Mr. Puneet Chhatwal earlier today. He's sounding even more optimistic about the second half of the year. So how do you play this theme? In Indian hotel industry is going to do well. If the second half is stronger, the luggage space could do better, right? If people travel more. You have two listed companies in there, VIP, that's been a rank underperformer, and Safari, that's corrected 20% on the top. The other way to play it is aviation. And there you have Interglobe that's corrected 20% from the top, and you have the other player that's struggling for survival, but some believe that SpiceJet will make it. Your take on this entire theme?
Yeah. So Indian Hotel and Indigo both are part of our portfolio. And we feel that eventually you will see the levels beyond 800 also in Indian hotels. And our sense is, if you look at the luxury segment, that is driving the show. The luxury, actually, the EBITDA, the margins have improved. The cash flow situation has improved much better. If you look at one of the other player in this segment, which is EIH, now that is consolidating more currently because of the will dispute. But once that is settled out, then I think that stock also can start coming back, which has Reliance, 18% stake, and ITC 15% stake. So we like this luxury segment play, which is, I think, is a more sustainable play going forward. So Indian Hotels has a major chunk of it. Yes, I understand Ginger is also there, which is in the mid segment. But eventually, our sense is more cash flows are coming from the luxury segment itself. Now, airline industry, you rightly mentioned 65% is owned by, the market share is owned by Indigo. Our sense is one of the, kick there is the ethanol blending of 5%. Now you are seeing how the government is pushing more for ethanol. And from 20% blending, they are going to 25% blending actually in the passenger cars. And in the airline industry also, there was some testing which has already happened for 5% of it. So just understand, in the industry which has 50% cost coming, if suppose they start working on that cost, it's a big positive. So our sense is the declines in Interglobe Aviation also in this decline of the market should be taken as a buying opportunity. And that is what we are still holding the positions, and we can add on more on declines now.
By the way, did you own or have looked at Indus Tower? What a fall. I mean, early September high was 460. Stocks now closer to 300. Any thoughts on this one? I looked at, by the way, I was looking at just sorting through earnings upgrades and downgrades after Q2. Basically, in the last 1 month, how earnings estimates moved. Indus actually is one of the very few companies, because mostly 65% of the companies have seen downgrades. Indus is one of the few which has actually seen small 5-6% upgrade, but upgrade nevertheless. Stocks come off sharply, Amit.
So we have never been positive actually in this stock. It had performed actually to some extent before, but there is always a question mark on the dependency on Idea, Vodafone Idea. So if that is not doing good, I think this company can also come under pressure. That was always there. I think in the telecom space, it is definitely a growing segment. We have already seen the prices, the tariffs increasing now. The Jio has increased that. Bharti is doing it. And Bharti, EBITDA, Bharti, if you look at the average revenue per user. So that is actually has improved significantly better than Jio. So Bharti is on a very sweet spot. This is what we feel. And that is part of our portfolio. And we feel that whenever market, possibly because Mr. Trump is coming on 20th of January, I think before that, somewhere market will start, will settle this dust of consolidation. And that is where these companies, the quality companies which have come down or which may come down possibly, that would be a time to look at those companies again.
Indus Towers peaked when Vodafone Idea itself stock price was closer to 18-19 rupees. And now Vodafone Idea is down to levels of 7.9, so sub 8 rupees on Indus Towers. And with that, that's Vodafone Idea has fallen to 8 rupees, and with that, Indus Towers has also corrected quite a bit. But thank you very much, Amit, for.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.